So that's my fear, is that if you're going to tell me that the S&P is down 30% in the next 12 months, how is Bitcoin not down on that and potentially down significantly? We're looking at 20, 30, 40% downside potentially over the next 12, 18 months in the stock market. How does Bitcoin, which still is being traded as a risk asset 80% of the time, how does that hold up against that?
Gareth Soloway does not think the conditions are right for a Bitcoin rally. There are just too many issues that are yet to be addressed, and any of these issues can pull the crypto market down again. Wondering what these issues are? Then you need to watch this video till the end, as Gareth shares a lot of valuable insight worth our consideration. Have you considered subscribing to this channel? It is definitely worth it, so hit that subscribe button now. Let's go over to Gareth Soloway.
So I'm still in the camp that we're in for a very sharp decline in the markets. And the reason I say that is twofold. Number one is that it's almost going to be impossible for the Fed to loosen rates to the amount that will be needed to get massive amounts of money to flow back into the equity markets and push us to new all-time highs. So again, if we think about it like this, right? How much did Powell raise interest rates from the start of this hiking session or season? And ultimately, how much is the market up or down in that period? And yeah, we've kind of stabilized, we've inched up a little off those lows, but the Nasdaq and the S&P are still well off their all-time highs. So the question is, how does he come to the rescue of a market when inflation remains north of 3%, 4%, 5%? And even again, I still think inflation is going to continue to come down. I just don't see it getting back to 2%, where he can marketably drop those interest rates back to the levels they were at pre-hiking process. One thing I'd love to show you guys, and again, this is going into some charts here, but this is one of the most powerful things that honestly has me somewhat spooked, is that if you look at this chart of the S&P 500 that I have up, look at the run-up we saw from COVID, the decline, and this sideways consolidation. And then what I'm going to do here is I'm going to throw up this chart, which is the market psychology chart. And in this chart, right, you see the same incline right here from COVID all the way to the highs. If you look, you had the optimism, the belief, the thrill, the euphoria. Then you had the decline, and then look at what this chart is showing you, and look at it in perspective with what the S&P is showing us. And it's almost identical, like literally identical to what we've seen in the market. And if we look at what comes after this complacency period, which I argue we are in, absolute complacency, you get into this big downward move, anxiety, denial, panic. It's the cycles of a bear market. And again, to me, that is unbelievably scary when you look and compare it to this chart here and how accurate it is in falling. Remember what we just looked at. If I put an arrow in here, this is your next move in the market. The biggest move of the bear market is likely on the horizon. Part of this is human psychology too. We're seeing this resumption of this kind of free spending environment where investors are willing to pay up for stocks, pay up for crypto, pay up for anything, ask questions later. That is not a healthy sign. It doesn't tell us the bottom's here. It tells us that we have another leg lower to go.
Mohamed El-Erian, the chief economic advisor at Allianz and Bloomberg, says he hopes the Federal Reserve can tolerate U.S. inflation above its 2% target. He says he does not think they can get CPI to 2% without crushing the economy, but that's because 2% is not the right target. To him, the inflation rate the Fed should be aiming for should be higher than 2%. This agrees with what Garrett is also saying. To him, 3% is a more realistic target. El-Erian's comments came after the faster-than-expected inflation figures sent bond yields rising and strengthened speculation that the Fed will continue raising interest rates through the middle of next year. Giving us an insight into what the Fed is planning, Richmond Fed President Thomas Barkin in April said that there is more work to do to rein in inflation and that the Fed will continue to monitor inflation data closely. This statement was made after the March consumer price report showing inflation was moderating. U.S. consumer prices rose 0.1% in March, just below economists' forecasts of 0.2%, and was the smallest gain since November. Recession is a word that nobody wants to hear, but it seems like it's becoming more and more likely. Federal Reserve officials are avoiding the term and instead using euphemisms like a soft landing or a hard landing to describe the possibility of an economic downturn. However, it's clear that the central bank policymakers are aware that a sharp slowdown could be on the horizon, and their own policies may be contributing to it. Jerome H. Powell, the Fed chair, has acknowledged that this outcome was likely due to tightening conditions caused by bank failures. While nobody can predict a recession with precision, there are enough reasons to suspect that rough times are ahead, and it's worth considering the possibility when making personal financial plans. Part of this plan for investors is using Bitcoin as an investment hedge. The question is Bitcoin really safe? Gareth Soloway answers that next.
For me, I'm not convinced yet that the winter is over yet. I think it's almost been too easy of a winter in respect to, yes, we've seen big declines, but we still have a massive amount of crypto coins out there that have no use case, no real reason to be in existence, and they're still in existence and they're still getting pumped on a daily basis, right? In fact, recently, I mean, Pepe and all these other ones, it's just flooding the market and going up ridiculous amounts. So I'm a little concerned about that. To me, the 30,500 level continues to be the level on the charts that I'm keeping an eye on. So if we just take a look at the chart right here, right?
Yep.
And we just kind of we can see that the Bitcoin chart ran up to that 30,500. It collapsed back on it, below it. We've now come back up a little bit because of the fear in the banking markets and so forth. But for me, this level is the key level, this 30,500 level. Can we get through that? If we do get through that, then I actually think the low is likely in on Bitcoin at 15,700. But again, I would just caution people at this point, you look at what Bitcoin has gone up and you look at the 2018 and 19 bear market. It had bigger rallies than this in percentage terms during that bear market, and people again seem to forget that. So don't be fooled. I've been through many bear markets in commodities, in the stock market, in crypto in my trading career, and sometimes it turns out to be the lipsticks on the pig here, and it could still roll over and head lower. So I still think there's a chance for 12 to 13,000, maybe even 9,000. But again, that 30,500 level is the level I'm watching. My biggest fear for Bitcoin is not that, it's going to get outlawed. That's not really an issue for me anymore. It's more that if we do see the declines in the equity markets that I expect, if we're looking at 20, 30, 40% downside potentially over the next 12, 18 months in the stock market, how does Bitcoin, which still is being traded as a risk asset 80% of the time, how does that hold up against that? If you see panic, and we saw this yesterday, we saw the stock market declining back down after a gap up on those Microsoft earnings, and Bitcoin was up big early in the day and then gave it all back by the end of the day. So that's my fear, is that if you're going to tell me that the S&P is down 30% in the next 12 months, how is Bitcoin not down on that and potentially down significantly?
Recently, Standard Chartered made a bold Bitcoin price prediction for the next bull cycle amid an unfolding banking crisis in the United States. In a note published on April 24th, Standard Chartered analysts predicted that Bitcoin prices will climb to $100,000 by the end of 2024. Analyst Jeff Kendrick noted that the collapse of several U.S. banks, including Silicon Valley Bank, Silvergate, and Signature, has solidified the case for Bitcoin as a decentralized, trustless, and scarce digital asset. It is surprising that Standard Chartered is making a positive prediction for Bitcoin, because just last December, the American bank said Bitcoin was going to crash to $5,000. Gareth also believes that the stock market would be an indicator of the great crash that will befall the crypto market. Bank of America's top global strategist, Michael Hartnett, agrees and warns that there's plenty of room for more S&P 500 downside, as 80% of recessions since 1933 have torpedoed stocks by 20% after they started. Next, he talks about banks.
Do you think that the regional collapse that we did see and that we continue to see, it's a precursor, it's a tremor? It's telling you that what the Fed has done now was earth-shattering in terms of raising rates as quickly as they did to try to stem inflation. And I'm sure there's going to be more tremors. In fact, if you look at loans, right? I mean, we talk about auto loans. There's massive amounts of defaults going on there where people aren't paying their loans. So there are things that are breaking now in the system. The question is, how long does it take to fully filter through the system?
What we are experiencing now are a result of accumulated stress on the system, and valves are beginning to break. Only time would tell how bad things would get in the coming months. If you want to stay updated, subscribe to the channel after you hit the like button. Thanks, and see you next time.